Hi everyone, Lauren from Market Beats. I'm just wanting to cover today some of the advantages and basics of market profile, specifically TPO, and just how it's improved my trading over a number of years. So we'll first start off with what overnight inventory is and how that all situates into the market. So the darker green color we have here is the pre-market and overnight inventory. The bluer color session is the regular trading hours. These make up any specific day. Every day I mark out the overnight high of the overnight inventory or pre-market and the overnight low, and then wait for the open. I do this across a multitude of different pairs. This currently is ES or the S&P. I do this in NQ as well as the DAX and FTSE, Euro Dollar, and I also trade oil and gold from there. So a TPO chart in essence takes into account the letters is based on time, price, and opportunity. So each letter represents 30 minutes on a chart, and each chart and profile is a day, so it gives you a full day's spectrum of actually what is happening from there. So typically the market will start moving around open, and then it starts to then seek a value area. The value area is the blue and green boxes respectively from there, and that essentially determines where the market has ultimately looked to seek value for that day. So if the market seeks value in that specific area, the white colors is what the market has rejected for that specific day, and ultimately all the market is doing between buyers and sellers is trying to find an average price and the best price to do business at. As an example that we can see from that is if an iPhone is $1,000 or £1,000, if it drops, and that's what the market sentiment and average price is. If it drops down to 800, then it's seen as a below value, so people would ultimately look to buy and then buy that back up to the average price of 1,000 from there. So it's just a different way to look at the market instead of your standard candlestick charts. I do look at candlestick charts, but we'll cover that in future episodes for this. I'm just looking to really try and get people to look at the markets in a different way, as it takes away the emotion and any of the advertising that you tend to find when you're looking at price. So it allows you to be a lot more, quote unquote, zen when you're looking at the market from there. So what are all these lines? So as I said, the top blue is the value area high. This is the value area low. The blue line, or the largest part of the bell distribution, is the point of control from there. And then the pink lines is where the market is put in single prints that need to be filled, and a single print is essentially when the market gaps through a specific area. We then also have a poor high and poor low, which is signified by these lines down here. And what that essentially says is that the market has not left excess or a tail at these specific levels, and when the market gets back down to these levels, it's likely that it's going to break, for example. This allows us to see where participants are stuck in the market and where traders are trapped, and takes it all into account. It really gives you some better context as to where we are situated within the specific market. So we'll go into a lot more of the nuances and how to actually take the opportunities, but this is just an idea to give you guys a general rundown of how everything is viewed in a market profile basis. The charting software here is Sierra Charts. So really good platform, quite a steep learning curve to get involved with it, but once you do, it's a fantastic piece of software. The other part I've not covered in these charts here is I have the volume profile as well, which is the white outline on the right hand side. So this allows me to see how much volume or contracts is traded at a specific price, as well as some imbalances as well to show me how many buyers or sellers were buying aggressively at those specific levels, which is great to see how traders are essentially trapped from there. As a quick example, you can see the market accept value up here. We had a ton of buying imbalances. From there, the market then opens up here, goes back up to retest, fail, and then we have just a liquidation of these buyers up here in pre-market who thought we were in essence going to start breaking up to all-time highs, which didn't happen. So that's pretty much everything today. If you guys have got any more questions, just let me know.